So if you're planning to start your own business, I think it's really important to pay attention to cash flows. And so what you could do with cash flows are set up what's called a statement of cash flows. And ultimately cash flows are kind of what they sound like. It's the flow of cash coming in, going out. And that statement of cash flow is just a financial statement that's going to track that inflow and outflow of cash for your business. The inflows would be money coming in, typically revenue from sales, money coming from clients and customers. And then the outflows, typically those would be for business expenses and business purchases. So in order to do this, you can just do this on paper, you can do it on a spreadsheet and just start at the top and break it down by month. So January, February, March. And what you can do is just at the top on the left side, start with the forms of income. So how is your business producing income? Is that, you're selling products, you're providing a service? If you're providing a service, do you get kind of like a monthly flat rate, or is it a like per service provided? So in the top, you would just write those things, types of revenue, and then in each month, expected amount of revenue coming in for that particular product or service or whatever it is that you're providing. And then below that, you can have the cash outflows section. So again, at the top, you would have the months. On the left side, you would have forms of revenue. Underneath, forms of expenses. So what money are you going to be seeing outflow per month for your business? So the obvious things would be, paying rent for a facility, paying for insurance, paying wages to employees, paying for advertising, paying for supplies and things like that. So you really want to make this an exhaustive list if you can. Think of all the forms of revenue that could be coming in and will be coming in, or you would expect to come in. And then also with expenses, think of all the expenses and cash outflows that you're going to face on a monthly basis. Now, the reason this is important is because it allows you to kind of project for the future. Starting a business, typically you're going to have a lot of money going out. You're purchasing things, you're getting started, it's kind of expensive, and typically the money coming in is going to be low. So maybe you have a business that doesn't have high startup costs, and therefore you think you're safe and you're not going to need a business loan. But sometimes you might have a lot of kind of upfront expenses and low income coming in, and maybe 6 months into running the company, you run into an issue with cash flows where you don't have enough money coming in to pay your rent or pay your employees. And that's where you can run into major issues, and many businesses do, and that's often why they fail. So a good example would be a construction company where typically a construction company would have quite a few startup costs if they're buying, vehicles and equipment and stuff like that. And then once they're up and running, they're gonna have quite a few operations costs as well. They might have a lease for property they're using, they probably have a few vehicles, maintenance, they're paying wages for staff, they're buying lots of building materials. So imagine you started this construction business and right away you got a project for a good amount of money. Well, the thing is, with that construction project, you're going to be paying for supplies and building materials long before you get paid typically. And also you're probably going to be paying wages to your staff before you actually get fully paid for the project. So unless you've been kind of strategic with understanding your cash flows, you might run into an issue where you're needing to pay your rent and your other expenses and pay your staff before your client has fully paid you for that project. And so maybe you won't have enough money to pay those, and then you'll need to go into debt and access a line of credit in order to do that. You don't want to run into issues where staff aren't getting paid on time and you're starting to lose employees and things like that. So that's why it's really important to understand the cash flows and protect yourself from running into issues. And again, that might just be setting up a line of credit for $40,000 that you can tap into just to kind of bridge the gap between getting paid for your work and having to pay your expenses to operate the business. So hopefully that was helpful. If you liked the video, you can just click like. Feel free to check out the other videos on my channel. I've got dozens of them that cover business management and startup. If you have a question that I haven't answered in a video, feel free to leave that in the comment section. And if you want to book a consultation with myself, you can. I offer a free 1-hour consultation for business management consulting for startup or businesses that are already operating and even have been around for a long time. And if you have a question, you can just leave that in the comment section below and I will address it there or even make a new video on it.